got some really good news coming out today, and I think that it could help turn the markets in the overall right direction. Now, we also caught some somewhat negative news. It's kind of in line with what we were expecting. We're going to break it down. First, we're going to talk about the good news because it really is good stuff. And you can see that the S&P is actually up during the course of today because of this news. All right, a lot of people are excited. A lot of stocks followed the S&P. Sundial's up. Cfvi, DWAC, they're both up. A lot of stocks are up. We're seeing good stuff overall, although I will say we have been falling a little bit over the past 10, 20, 30 minutes or so ever since Producer Price Index report came out. So we're going to talk about that too. But good morning, Tim, Rocky Mountain Gobblers, Quaid, Rich M, Matt, Auto Codes. Good morning, guys. What's up? We've got this really good story overall. I think this is really good for the markets. This is alleviating probably one of my personal biggest fears of what could go wrong with the markets. Or not completely alleviating it, but it's a very good sign, okay? Russia pulls back some troops from the Ukraine border. So we're happy to see that Putin is starting to back down a little bit from this big invasion. And it's very interesting, what they're saying about this, what Russia's saying about this. The Russian Defense Ministry said it had begun returning some troops to deployment bases after their training exercises near the Ukrainian border had finished. So the Russian Defense Ministry spokesperson said troops who had recently been posted to Russia's southern and western military districts, which share a border with Ukraine, had completed their drills and have already begun loading onto rail and road transport and will begin moving to their military garrisons today. So it looks like they're really sticking with that story of it was just military training exercises. And to be fair, they never, I don't believe they ever stepped foot in Ukraine. They just stood near the border and did whatever they were up to. So maybe it was just exercises the whole time and it was nothing to worry about. Who knows? But there you go. We have it right there. Russia is backing down from the Ukrainian border. It looks like it might have been nothing after all. And on this news, we're getting some really interesting stuff. Crude oil prices fell 3%, okay? People were worried that if Russia and Ukraine and the United States were all going at it, then oil would be harder to come by because Russia and Ukraine, they produce oil, and people were worried that we wouldn't be able to get as much if we were in a war and potentially also consuming a lot with an ongoing war. So people were worried about that. So now that some fears are alleviating, prices for oil can start to go back up. Also, interestingly, a U.S. traded fund, which invests in big Russian stocks, jumped nearly 5%, okay? Russian stocks had not been doing too good during this whole thing. The U.S. stocks hadn't been doing great, but Russian stocks really hadn't been doing good. So Russia, being a smaller, slightly less powerful country than the United States, they were not doing too good stock market-wise, economy-wise, currency-wise, due to this whole crisis. They were taking a much bigger hit than us, so maybe that's why Putin was deciding to end this thing earlier rather than later. So it's good to see overall. I mean, we saw a boost in our stock market. It's not been the biggest boost. We could have seen a bigger boost than this, but all things considered, it's a much-wanted boost. So we'll see what happens throughout the course of today as news of this circulates and people might start having a little bit less fear in the market. And we'll see if the situation develops any further, right? It's certainly possible that Russia, could come back and do something again, do more military exercises. I don't know which military garrisons they're returning to, right? If we actually look at this story, what the Russian defense minister said was that troops have begun loading onto rail and will begin moving to their military garrisons today. Now, are those garrisons the ones that people were worried about them being stationed at near Ukraine, right? Because we've been in this crisis for a couple of weeks now, I feel. And a lot of it was troops moving in closer to Ukraine. And only just a couple of days ago did troops actually move literally onto the border of Ukraine. So maybe the troops are still sticking around somewhat close to Ukraine. We'll just have to see what happens throughout the course of the next couple of days. If they're really gone or if they're still lingering nearby. We'll see what happens with that. And NJ, thank you very much for that super chat. Happy $2 Tuesday, he says. That is a good tradition. I like the sound of that. And a lot of people are saying, war. Oh, yeah, war BS. Yeah, no, I overall was not too worried that Russia was actually going to invade. It was a situation where we were looking at a low probability of risk, but if the risk actually came to be, then it was going to be pretty devastating for the stock market. I mean, we thought that, this little dip was bad when it went down maybe 12% from the highs to the lows. I think we would have seen much, much, much lower than that if Russia and the United States were actually going to be going to war. We would have seen maybe, we could have broken below the COVID lows. It really could have been devastating stuff. It would not have surprised me to see us really crash down in a big way because, the whole pandemic crash, people were a little worried about, this disease that's spreading around, but people knew kind of from the beginning how deadly it was, and it wasn't the biggest worry in the world. But this really could have been a nuclear war or something. And thank you, Quaid. Thank you, Quaid, for $2 Canadian. Awesome. That's what Sundial transacts in. So thank you very much, man. All right. And good morning, Greg, Rich M, and Worlds. Good morning, guys. All right. So we know what happened with Russia. Russia's pulling back their troops. And it's not just stocks, not just Russian stocks, not just American stocks, not just the Russian currency that's rising, not just oil that's lowering. It's also having an effect on Bitcoin and Ethereum. Now, who knows exactly why it's having an effect on Bitcoin and Ethereum. You might have thought that Bitcoin and Ethereum would be kind of immune from this kind of thing. But it appears that Bitcoin and Ethereum are rising a decent amount as these tensions ease. I guess people just didn't want to hold cash. And thank you, Mike Steele. Happy $2 Tuesday. Wow, you really started something, NJ. This is cool. So, looking at the crypto charts, we're seeing that pretty much every crypto is up, right? You're looking for up 4% on Bitcoin, up 5.5% on Ethereum, up 7% on BNB, and Tether only up 0.02%. We're going to talk a little bit about Tether, USDC, a lot of these stable coins we're going to be talking about pretty soon. But Dogecoin's up 2%, Shiba Inu up 2%. A lot of these cryptos are experiencing positive price movements from this Russia-Ukraine situation. I guess people really did just want to hold cash through a war for some reason. As if when we went to war, we wouldn't have started rolling those printers again and printing a ton of cash. I'd much rather hold assets and cryptos than cash during a war. But, to each their own. Whenever people get worried, they seem to flock to cash. Gold would have been really good to hold right before a big war. I think that could really benefit gold. If people are worried about a catastrophe or the end of the world, I think gold would probably be benefiting pretty significantly. But it looks like the end is in sight with this whole Russia situation. We're seeing good stuff. And Quaid says another 2 for the exchange rate. Thanks, man. That's cool. I think, what is the exchange rate on Canadian to USD? What is that? Yeah, $1 Canadian equals 0.79 US dollars. Wow. Well, over the past year, it's actually been falling. We can pull this up. It's not looking too good. It's on a little bit of a downtrend. Over the past 5 years, not too bad. Pretty stagnant. So thanks, man. All right. So Bitcoin's doing good. Cryptos are doing good. However, we said we were going to talk about Tether, and now we will. Democratic lawmaker unveils bill that would define boundaries for the stablecoin market. So you guys know stablecoins. We'll pull them up right here real quick. For those of you who don't know, stablecoins, they're stuff like Tether, USDC. You can find them basically just by looking at this chart and looking for anything that's exactly at $1. Binance USD right there, 0.999 cents. DAI, that's probably a stablecoin. Pretty much anything with this dollar price tag right there is a stablecoin. It's very rare for coins to just stay exactly at $1 for any significant period of time if they're not a stablecoin. So you can just scroll down and maybe we can find one more. I guess maybe those are the big ones right there. There aren't too many more. There we go. This seems like most likely a stable coin. No, sorry. Whoa. Pax dollar. Sorry, Pax dollar. Right there, number 88 at 0.9998. They usually fluctuate, a fraction of a cent, but they're pretty much always sitting at $1. So the most popular one is Tether. And the reason that people do this is because a lot of people want to be involved in the crypto space. They want to maybe transact in cryptos, but they're worried about the huge fluctuations in cryptos prices. Looking at Bitcoin, you can see it fluctuates pretty dramatically, right? It's up to 67,000 1 month, and then a couple months later, it's down to 35,000. People don't like that. They don't want to use Bitcoin to transact in because they're worried about these price fluctuations. So what you can do if you want to transact in crypto and have all of the benefits of being able to transact on a blockchain instead of using cash, you can buy coins like Tether or USDC. And the deal is those coins are supposed to have, well, they're being backed by some kind of entity, right? And that entity is supposed to have $1 for every coin that is in circulation. Now, there's a lot of speculation in the community that, some of these coins do not actually have $1 backing each coin, that maybe there's some manipulation and some foul play going on, and it's just a scam. But we've yet to see that so far, so we don't know, right? We don't know if that's actually the case. I suspect that it probably is, but it's the kind of thing that we see with banks all the time, right? If you look at the bank, and if everyone wanted to withdraw all of their money from the bank wouldn't have enough cash to give everybody, right? They wouldn't have enough cash. They wouldn't even have enough money to transfer to your account electronically, and that's because they take money, they loan it out to people, they collect interest on it. They're collecting profits, right? When you put money in the bank, it's not just sitting there. And I think, to an extent, it can kind of work the same way with these stable coins. I don't think, and this is just my suspicion, I don't think that they actually have all of that cash just sitting in a bank account ready to go whenever someone wants to exchange all of their Tether for US dollars or all of their USDC. Just personally, that's how I feel. I don't think they've got that ready to go. The claim is that they do, though. So we'll see what happens with these coins as these new laws are enacted, right? These new boundaries for stablecoins. Basically, so far, what I've gleaned from this bill is that they just want to designate certain digital currencies as qualified stablecoins if they can be redeemed on a one-for-one basis for the US dollar. So hopefully it's not going to disrupt the place too much. Hopefully it's not going to stifle innovation, as the leader of this bill has said. He said, Gottenheimer, who is a Democrat who wants to enact this, has said, "I don't think we should stifle innovation in the cryptocurrency market." So we'll see what happens with the bill. Hopefully it's not too catastrophic for stablecoins. If anything, I think some people might appreciate this kind of regulation, just making sure, with a thing like stablecoins, it's not like people are trying to make money or make $1 million trading these stablecoins. They might appreciate a little bit of extra regulation just to make sure that the stablecoin markets are operating as they should and that there's no huge risk of losing all your money if you invest in them. And we'll see what these regulations are in the future. We'll see what happens with them. But it's a common theme that we've seen lately, right? A lot of people want to start enacting new regulations on crypto. Biden wants to put new regulations on crypto. Just a couple of weeks ago, we were looking at Russia, I believe, banning crypto mining. So a lot of people are now thinking about crypto regulations. And well, it'll be interesting to see what kind of an effect that has on the markets if cryptos end up either moving down because of all this new regulation, stifling innovation potentially, or maybe they'll start to move up, as we're kind of seeing today, not because of this new legislation, but because of the Russia situation. Maybe they'll start to move up, though, over the long term if people view them as more stable assets. If they're viewed as more trustworthy, we might see them move up. So there's two sides to this coin. There's multiple ways it could go. Hopefully it will move up, right? I'm hoping it'll move up and not crush the crypto markets. But that's coming from someone who is holding cryptos. I mean, a lot of people out there do not like cryptos very much. Peter Schiff being one of them. Big crypto bear right there. I'm sure he would love to see the government come in and crush cryptos. So we'll see what happens with it. Hopefully nothing too bad. But the relatively negative news that we got for today, we'll pull it up in just a second. First, though, you can see that when this news came out at 8:30, we did start trending down in stocks. We were trending down a little bit, but we were only down about $1 from the highs. Now we're down a couple more bucks from the highs. So stocks overall have been trending down since we got this news. And it's not the prettiest news. It's not necessarily unexpected, though. It's a little outside of the forecast, but it's not completely unexpected. Wholesale prices rise 1% in January, up 9.7% over the past year. So this is the producer price index. And, we have been seeing higher than wanted or desired inflation. So it's not necessarily a surprise to see that these forecasts, that they keep beating them, right? They keep having more inflation than expected. And you can see the chart right here over the past 5 years just about. You can see that, we used to have relatively low producer price indexes, lowish inflation, and now we're having more steady, higher inflation. So people aren't too happy to see it. Stocks, the basic vibe in the stock market right now is people are worried about these price increases because they're worried about what the Fed is going to do to combat them. Now, we saw, I believe it was yesterday, that the Fed was talking about, or at least some people at the Fed were talking about potentially raising rates faster than expected and front-loading these rate hikes and raising them quite a bit. But I will point out that if you look at the inflation rate, it is fairly significant, right? It's at 7.5% as of our last reading in January. And that's what the government, that's what they collect, right? That's the data they collect and come up with. And they've changed it in the past so that it doesn't look as bad. And if you're a real person living in real life, you're probably experiencing more than a 7.5% increase in the costs of everything, right? You're probably experiencing slightly higher than that, maybe much higher depending on where you live. But overall, even if they did front load these rate hikes and try to really get ahead of this thing, it would be tough to do. I don't think that they're actually going to raise rates by 7.5%. I think that would be a real shock to markets. That could actually move markets down, but I do not think the Fed is going to do that. First of all, the government has quite a bit of national debt, right? We just hit 30 trillion not too long ago. Second of all, if you look at the stock market over the past years, it's been performing rather well. And nobody really wants to crash the market, right? They don't want to crash the market. I think they'd rather at the Fed, at least I think Powell at the Fed would rather see higher than wanted inflation than lower than wanted stock prices. I mean, we're already at lower than wanted stock prices, right? People want stocks going up. They want them going up day after day. And Powell knows that. He doesn't want to put us in a big bear market for a period of months or years and live out the last of his days being remembered as the guy who crashed the stock market. He's already created this inflation situation for us. I don't think he wants to crash the stock market too, but we'll see. We'll see what happens with it. Overall, though, people are worried that the Fed is going to be a little bit too hawkish and is going to slow things down a little bit too much. It's going to raise rates a little too high, is going to cut spending a little bit too much. And that's why we're seeing some fear in the markets right now. But what's important to remember is that the Fed is most likely not going to actually raise real rates to 7.5%, right? They might raise the nominal rate a little bit. They might say, we're giving you, 2 or 3% in your bank account in interest. But at the same time, if you're seeing 7.5% inflation, you're actually losing money just keeping money in a bank account. You'd rather just have the cash invested and potentially get higher than 7.5% on your investment returns than have money sitting in a bank account and be guaranteed to be losing, the 4% difference if you have a 3.5% interest rate, which even that would be pretty high for the Fed to raise it to. So for the Fed to actually combat inflation and make it not worth investing in assets, they'd have to raise the interest rates to be pretty significant. Right now, the Fed, I think, is mostly posturing. I think they're mostly trying to get people to tighten themselves, right, to tighten their own spending and to lower inflation psychologically. I think that's their game right now. Hopefully it works. Hopefully we don't see too much more inflation. Hopefully people do stop spending a little bit to a certain extent. And hopefully they don't have to tighten policy so much that stocks move down. But we'll see what happens, right? We'll see what the Fed ends up doing. They are playing it by ear at this point, it seems, right? They're not actually coming forward and saying we have a specific plan that we're going to enact. They're kind of just saying we're going to play it by ear. And whatever happens. So hopefully it's not too bad of a situation over the next couple of weeks. I don't expect it to be catastrophic. I think whatever the Fed does, they know that the markets are, being propped up by them, and that going too far to the other side, going too far to the bearish side would have a really devastating effect. So I don't think they're going to actually combat inflation in a real way and raise interest rates to 7.5%. I think that would be ridiculous. Nobody's expecting that. And I think they're just going to come to accept that maybe we have slightly higher than desired inflation for a while. And if you look at the long term, we have had these spikes in inflation before, way back when. We haven't had them too recently. The last time was the 80s. So we could just be on the beginning. And it's likely that we will continue to see slightly higher boosts to inflation over the next couple of weeks and months, unfortunately. But overall, the stock market can still do decently during times of high inflation. In fact, some of the best performing stock markets are stock markets for economies that are in hyperinflation, right? Because everyone wants to ditch their cash. They want to buy any other asset that they can, and some of those assets include stocks. So, if you're holding stocks, you might be in for a wild ride, but we'll see. I don't think we're going to see hyperinflation, hopefully. That would be pretty devastating, but you never know. So, all things considered, I am not too worried about stocks. I think we're in a pretty good position. Stock price-wise. Now, CFVI, that's an interesting one that we've got to talk about. CFVI, Rumble stock. It has been somewhat stagnant the past couple of days. Nothing too crazy going on with it, but just until about a week ago, it was much lower than where it is now. So we've actually, it's kind of funny to look at. I've not quite looked at this view yet, but we've basically had the same pattern every day. We just have a little hump during the middle of the day. So interesting stuff from CFVI. Maybe we'll see it again today. It looks like we're on the rise, and we did get a tweet out from the Rumble official Rumble Twitter account right here, and they say hard at work and coming soon, Rumble Cloud, and then they have a picture of, I guess these are servers that they've got a picture of. So overall, they're working hard, it looks like, at installing the Rumble Cloud. And for those of you who've been watching the channel for a long time, you know what the Rumble Cloud is meant for. It is meant to provide video and cloud service for Trump Media and Technology Group. So this is part of their deal, right? And then I'm sure they'll use the cloud for other things as well. But they are going to be able to use it to help TMTG and True Social deliver video and streaming services. So overall, that could be a very good deal for Rumble. I mean, the more that they get tied to TMTG, the more likely they are to get a big audience of stock enthusiasts buying up their stock and potentially raising their price, and potentially helping them out fundamentally as well by moving over to Rumble. Maybe some people who have never heard of it before will hear about it and start using the service. For those of you who have not heard of it before, I am shocked, because we definitely talk about it a lot on the channel, but you guys can check it out right here. And look at that. Look at the front page of finance. We got the stream right here. So feel free to check us out on Rumble if anyone wants to. I mean, I love the Rumble stream. And we have it right here. I mean, is anyone saying, no one said anything in the comments yet, but if anyone wants to say something in the Rumble rants section, feel free. We can look at those comments too. I just mostly have the YouTube section pulled up right here because we do tend to get a lot of people commenting there. But I mean, if anyone wants to comment in the Rumble section, I'm sure there are some people watching. There's 16 at the moment, so overall good stuff. I mean, definitely check it out on Rumble. Definitely check out Rumble. I will say one thing, right? CFVI, big fan of the stock, big fan of Rumble. But one thing, if they could work on one thing, I think it would be this. Okay, you look at Rumble, and sure, they've got a good section, but there's a lot of dead space on a lot of their screens. There's a lot of dead space, and I'll just pull up YouTube for a second just so you guys can see a comparison. This is Rumble right here, and then this is YouTube, and there's not too much dead space. You see a lot more content. Maybe not a lot more in terms of videos, but you definitely have some of the videos being more prevalent, right? You have mostly, for the most part, you're looking at 6 big videos and then 3 little ones underneath. And if you ever do click on a section like the finance section, it's just in this line view. And I think they would really benefit from having a grid view, having a couple more of these videos available to view than they currently do, right? If you look at my subscriptions on YouTube, you can see it's a grid view, and then there's basically more videos in the top line right here than there are on available, the whole line that Rumble has available on your entire screen. So there's vastly more videos that you can see on YouTube, and I think that would definitely help with click-through rates and people actually clicking on certain videos and finding something that they're happy with. I think they would really benefit from that, and it seems like a relatively easy change to make. I think they'd get a whole lot more watch hours, watch time, more returning users if people could easily go to Rumble and had a almost guarantee of finding something that they're interested in. Because I have a big monitor, I'll say, right? I've got a big monitor. Some people might have a smaller monitor, and you might not like 1, 2, 3, 4, 5, 6, 7. You might not like the top 7 videos, but with YouTube, you've got 20 or 30 videos on one screen, and if you scroll down, then you see a whole lot more. So we'll see what Rumble does about that. That's just my personal suggestion to them. I should probably tell someone there to do it instead of just saying it on the stream. And Nick says Rumble needs to update their design. It doesn't appeal to me. I will say it's not the most appealing design in the universe, right? Overall, I think they could benefit from having a bit more algorithmic stuff going on. But they're an early company. They've probably got some plans coming down the pipeline, right? I think they've got it figured out, right? They're going to work on it eventually. I expect. So maybe I'll mention it to someone there, but who knows? I understand it's tough to come by coders these days. So any coders that you're getting are coming either at a very high cost or are not going to be working for you anytime soon. So Rocky Mountain Gobbler says, I agree. I have a Rumble account and wish they would improve it a bit. Yes, the Rumble accounts and the Rumble app. I'm not the biggest fan of the Rumble app. I wish it was just more like it brought you to the Rumble homepage. As it stands now, the Rumble app kind of, I don't even know what it is really. I'll pull it up right here, but here's the Rumble app. For those of you who are curious, we'll put it on the full screen. It just shows you, I guess it shows you your subscriptions. Yeah, so it just shows you your subscriptions, and here we go. Basically, the only person I actually follow on Rumble is Matt Kors, so it just shows you your subscriptions, and I guess that's fine. So be it. But overall, I think they're doing a good job. I think that what's more important than the design is the morality behind the platform and them trying to do the right thing. So overall, they're doing a pretty good job, I would say. I won't bash them too hard, right? I think anyone can improve the aesthetics of what they're providing. I think what matters is the content and the meaning behind it and the mission. So they're doing a good job, I would say. People can probably look at my channel and say, your thumbnails need some work. You could have a better set, and it's like, yeah. I will work on that though. I have been meaning to. I've been changing the thumbnails up a little bit as of late, so hopefully they're more appealing. And I will be working on getting a better set sometime soon. So hopefully we'll see some positive changes to the channel looking over the next couple of weeks or months. We'll hopefully see something like that. Now, Sundial, I want to talk about for a little bit because Sundial, one of our favorite stocks on the channel, they had a great close on Friday. They moved up to highs of 68 cents, and it's good to see that they haven't really started a downtrend or anything like that. They're taking a little bit of a breather, and they're actually up today from where they closed. They closed yesterday around 61 cents. Currently, they're sitting around 62 cents, almost there. And overall, this is not a horrible situation, right? People were kind of discouraged to see it was down maybe 6 or 7% yesterday. And, that wasn't ideal. Ideally, we wouldn't have seen them down 6 or 7%. Ideally, they would have stayed either near the highs or maybe hit up 70 cents. That would have been nice to see. But it's completely understandable, right? This stock has been beaten down for a very long time. And we'll pull up the short interest on it for those of you who are curious. But it does not surprise me too much to see anymore that when Sundial has a big pump up one day, that it does tend to get beaten down. There are a lot of people who are out of the money with this one, right? They've lost money on this stock, and whenever they see a move up, some people get to a point where they are now in the green or less in the red, and some people want to sell, and it's understandable. A lot of those people probably aren't keeping up with what we've got going on with Sundial stock, right? They probably don't realize that we're on the precipice of legalization and that could really be moving a lot of these cannabis stocks up. But it's fair, right? If you want to cut losses on a stock or even take some gains, some people surely could have been buying at these lower levels. Some people were. I mean, if you see volume, which there definitely was some volume at these lower levels, some people were buying shares potentially for the first time when they saw this thing get below 50 cents. They might have been buying it up, and some people could be actually quite significantly in the green, right? Some people, from where we were to where we are now, could be up 37%, and that's a completely valid price at which, if you're up 37% on a stock and you want to sell it, fine, you can do that. I mean, good. That's good for you if you want to sell a stock and you're up 37%. That's great. Some people might have even bought in a couple of days ago, and they're maybe up 10, 12%. So it's a little bit of a struggle to get Sundial moving up. But I will say that on Friday, there was no Sundial-specific news that was driving it up, right? It was just that it had been beaten down a while. It was on an uptrend, and we got some momentum coming in, so we got pushed up about 18%, and people were excited about that. But the good news is that it still looks like we are on this uptrend, right? We haven't actually moved down in a significant way. We held the 61-cent support level pretty much all of yesterday. I mean, we broke below it very briefly before returning to it, and then we struggled in the after hours with it as well. But now we're up above it, and we're up on the day. We're up since close, so we're up 1.2%. Hopefully we're going to see Sundial stay away from this 61-cent support and just continue moving up. Overall, it could defer to the market. I mean, the market's up about 1% from close on this Russia-Ukraine situation, and so is Sundial. Sundial's actually up a little bit more than the market, but if the market starts to take a turn for the worst, if they start to move down on inflation fears and potentially, the Fed tightening fears, then maybe Sundial will follow suit. It looks like Sundial did start moving down around 8:30 when we got that PPI report, when we heard that inflation was higher than what people were wanting. Then we did actually start to move down on Sundial. So right now we're following the market, and I think that's probably a good thing because I think the market could do with a little bit of recovery, right? We got beaten down for sure over the past 2 days. People were quite worried about Russia. They were worried about Putin doing something that they weren't going to like, and that could move the markets down significantly. And now that those fears are mostly alleviated, they're not entirely alleviated. They're quelling the fears right now. I think that we could see good stuff for the markets overall and for Sundial in the future. I mean, we're seeing some green so far. We're seeing green, and I'll pull up the VIX for a quick second. You can see the VIX, basically the volatility index, just tracks people's fears and how worried people are about the markets. And we are falling significantly over the course of the past couple of hours, right? We're falling significantly, and it got pretty bad, right? We started rising quite a bit as soon as Russia and Ukraine were on the forefront of people's thoughts, because I think until then, until Russia really started moving their troops right on the border, people might not have been entirely with the situation. Now, I didn't actually sell any stocks or do anything or make any moves because of the Russia-Ukraine situation. I wasn't actually worried that something would happen, because in a situation like that, that's a potential world ender, and I don't necessarily care how my portfolio is doing if the world is ending. So I wasn't about to sell any stocks just in case there was a potentially world-ending war. But some people started to sell their stocks, and thus the VIX started to move up, right? People began to have more fear in their minds, and that reflected in implied volatility in the stock market and options prices over the past couple of days. And now we're finally starting to see that subside. If we can keep moving down with the VIX, that typically correlates with stocks overall moving up. So the hope is that the VIX keeps moving down, stocks keep moving up, and it looks like Sundial is doing pretty good stuff. We're up about 3% now. Cfvi, we're seeing the same thing. We're up 4.8%. And DWAC is up this is two CFVI charts. DWAC up 2%. Good stuff. AMC, we'll pull up for a second, up 4.11%. So overall, we're looking at pretty good stuff in the markets, right? The markets seem to be recovering. Hopefully we'll get back up to where we were pre-PPI report pretty soon. But overall, I'm liking the look of this. It looks like we could be in for a very green day. We could be in for a very green day. And NJ says, minimize screen and keep other stuff displayed. If Rumble could make it possible to minimize the screen and continue playing, I'd switch fully. Do they not keep playing the video when the screen is minimized? That's crazy. I've not tried that personally, but I'm surprised. I mean, sometimes I'll have them running in the background, I feel. Maybe they're just still fully displayed, and I have a tab pulled up over them, though. I don't know. I've not tried that. YouTube does that on your phone. If you have the YouTube app, then you actually have to pay, I think, for that feature. You have to buy YouTube Red or something like that, and then you can play YouTube videos with your phone off, or YouTube Premium or something like that. They may have rebranded it. So YouTube charges for that feature. I don't know if Rumble wants to go down that route, if many people would buy it at this point, but that's a potential way to earn some extra revenue. I mean, YouTube makes some revenue off of it, and they reward the creators. I think I see every now and then, whenever someone watches a video with that, I see like a couple of cents flow towards my revenue from YouTube Premium. So It's an interesting system. I don't know exactly how they price it and whatnot, but I've never really considered getting it. I'm happy enough just playing YouTube videos and having the screen on. So I think most of the time, if I'm watching YouTube, it's not for music. I know some people do use it for music and then it's useful, but I prefer Spotify for music, so I'll stick with Spotify for that. Now, if Rumble made a music platform, that would be interesting. I'm curious how many artists, I'm sure artists would put their music on it at least. I'm sure it wouldn't cost them anything to put their music on. That would be interesting. They could really expand. If they're expanding into the cloud service provider space, right? They're already expanding. I believe we had a story a couple weeks ago about them expanding into the payment processing service space. And they're already in video streaming. They've already got little Rumble Reels, I believe, which is similar to TikTok. They could expand into music next, right? They might be trying to build a whole ecosystem for creators. And right now, people could probably post their music to Rumble and have a music video or a lyric video or whatever. But if they made a music streaming platform, that would be very interesting to see. Sam says there's an app called Tube Browser that I use for this YouTube feature. Interesting. Okay, so it's kind of like a workaround to getting YouTube Premium. Well, I don't know if YouTube is going to like me talking about that on the channel very much. They probably don't want to know, they don't want people to know about these workarounds that are, I'm guessing Tube Browser is free, so we won't mention it too much more, but that's interesting. That's good to know. That's good to know. I probably won't bother with it. I don't really have a need to have my screen off while I'm watching YouTube, but look at this, guys. We're seeing some good stuff in the markets. I'm happy to see it. I wonder what cryptos are doing. Are they moving up or down? So, oddly enough, while the markets actually started rebounding, we'll zoom in on Bitcoin. Bitcoin, since market open, actually started moving down a couple $100. Look at this, 924. So over the past 10 minutes, just about, Bitcoin moved down from 44,382 to 44,285. So about $100 wiped off the price of Bitcoin while the markets were moving up. So maybe people were taking some money out of their cryptos, pouring it into the markets, but who knows why cryptos are moving down when the market's moving up. Typically they'll move in a similar direction, but looks like Bitcoin at least isn't having the best market open. And I would really like if anyone knows of anything that's like a charting platform for cryptos. I know you can use Webull to chart those cryptos, but I don't use Webull that often. I'm not the biggest fan of the look of Webull. And I remember I did this poll a while ago. Let me include this poll one more time because I didn't look at the results. I'm going to ask you guys if you'd rather see me use Webull for this whole charting thing, and I could learn, how to live with it, or if you'd rather see me use TD Ameritrade, because right now TD Ameritrade I like quite a bit. So let me ask this in a poll. Okay. So here we go. We've got the poll. And Sub-Zero says Robinhood is the best. Easy to use. Strimble says Robinhood. Well, I guess Robinhood does have that desktop platform. But, I agree. It's very easy to use. But sometimes we're looking at stuff that's a little bit more intricate than what Robinhood can provide. I don't know if they have minute-by-minute candlesticks. So, when we're looking at the minute-to-minute price action, I do prefer to use something like Webull or Thinkorswim, but, we might, I have Robinhood, but we're probably not going to use Robinhood for the streams. We'll consider it, though. And, all right, we're already getting some votes into this poll. Most people, it looks like, prefer Thinkorswim. That's what I was hoping for. But answer honestly, guys. Don't just answer what you think I want to use. Let me know what you guys really would prefer to see, because I know a lot of people are certainly using Webull. And if anyone doesn't have a Webull, it's a good platform. I just don't happen to use it for streaming. And I'll show you guys right here. if you want, you can actually, I have the stream pulled up, you can actually go down. We have the stream right here. You can go down, you can obviously vote in the poll, you can hit the like button on the stream, and you can scroll down and you can get up to $6,300, I believe, right now with Webull. You get 3 free stocks when you open and fund a new account. If anyone doesn't have a Webull, you might want to consider it. All you have to do is open up an account, you get a first free stock, and then deposit any amount. It could be a penny, it could be $1, it could be whatever you want. You get 2 more free stocks valued up to $3,000 each. So, interesting opportunity there. We've also got a bunch of referral links. If any, I mean, they all offer you something. They're all giving you free stuff, and it doesn't cost anything to get these things. So it's not like you pay money and you end up losing money on the deal. You actually make money every time you click one of these links and use the thing. So it's an interesting offer. I just put all of the things down there just in case anyone was interested in getting some free cash. Sounds like a scam. I promise it's not a scam, though. All right. So we'll pull up something that we've got on AMC, the AMC short interest, which, as of I last checked, was actually at all-time highs, but it looks like that may have changed. So look at this. AMC short interest right here was just a couple of days ago at all-time highs. You can see this green line, the Ortex estimated short interest at least, is currently pretty darn close to all-time highs. 110 million shares short, 21.5% of the free float. It's strange to see that, AMC, we'll pull it up here over the longer term, while it's been getting beaten down, is continuously getting more and more shorts pulled into it. It's strange that they want to short it more the lower it is. You would have thought that the higher it was, they would have thought, let's short it now, right? Let's short it now because there's more money to be made if it moves to the downside. Now it's already moved down pretty low, and I think that it's gotten to a place where there are more buyers than sellers, and we can see that over the past couple of days at least we've been rising in price. And the markets have been recovering, and overall, I don't know if it looks very appealing to be a short seller on AMC. I don't know why over the past couple of weeks we've seen a ton of additional short sellers come in. It's strange that they're almost not quite trying to bait people in to buying AMC stock and squeezing them out, but they're almost making a blunder where they're not remembering that the whole reason that people are buying AMC and trying to pump it up is to squeeze out the shorts. And now they're pumping themselves up to a higher than ever short interest and expecting people to just leave it be. And we'll see. We'll see if people just leave it be or if we start getting a bunch of new AMC buyers hoping to squeeze out more shorts than have ever been in there before. I'm an AMC holder. We'll see what happens with the stock over the next couple of weeks. Hopefully it'll be good stuff, but as of right now, we're seeing some positive pressure, right? The past day or two haven't been the best, but overall, we're up 2% on the day. Sundial's up 2%. The markets are green. Russia and Ukraine are no longer on the forefront of people's minds, so I think we could be seeing some good stuff in AMC, right? People were probably very quick to ditch AMC, some people at least, when there were big fears in the markets. And I think, those people got out. Maybe now they have an opportunity to get in cheaper when there are even more shorts than are in AMC at the moment. And something that a lot of people don't realize about AMC is that the options are pretty expensive and pretty enticing to sell covered calls of. Now, not everyone's going to like this strategy. A lot of people want to just hold AMC and get a moonshot with it. But what you've seen is AMC is stuck at these prices for a while. It's stuck at these relatively high values for a while, though it has been falling as of late. However, the implied volatility is always pretty significant on AMC. A lot of people are usually interested in AMC options, and so the options are pretty expensive. And it creates a good opportunity where you can buy the stock and sell the options, and perpetually, month after month, do this and just collect premium, selling these relatively expensive options. And if they ever expire, right? If they ever expire in the money, if AMC ever moves up and they expire in the money, and you have to hand over the shares, well, as long as you're selling options that are fairly far out of the money, then you should not only make money collecting premium from the options, but also from selling the stock for a gain. So it's an interesting opportunity that I've been taking advantage of. I don't know if everyone's been taking advantage of it, but I certainly like selling options. Not just on AMC, but on a lot of stocks. I like selling a lot of options, but No one uses Robinhood, says check cash. And yeah, I think a lot of people definitely moved away from Robinhood when they got rid of that buy button, or when they at least limited the number of shares you could buy. And I remember it because at the time I was holding Sundial, and I really wanted to buy up some more. I noticed I couldn't, and they also did something strange with options. They wouldn't let me. I forget if it was that they wouldn't let me sell options on it, or there was something going on with Sundial options. At one point, it was crazy premiums that I could charge for these options, and I couldn't quite execute the order. I remember I was in the car. Never do this, by the way. This is not a recommendation, but I was in the car, and I was driving back from the grocery store looking at these Sundial options on my phone. You know, you're not supposed to text and drive. You're definitely not supposed to trade and drive. But I was looking at these option premiums, and they were just too high to pass up on. So don't do that, though. That's not safe. Strimble says, dude, you're my #1 market open guy. Some of these guys are super annoying. Appreciate you. You deserve a lot more viewers. I appreciate that, man. I appreciate that. We do our best here. I try not to be annoying. You know, and sometimes it doesn't work, but hopefully most of the time it doesn't come across that way. And Silver says, JT would rather control the citizen than sit down and talk about a better path forward. JT. Who am I thinking? Who is JT? I'm not sure if I should know who JT is, but it's someone important, I'm sure. All right, so the markets have stagnated officially. I mean, look at this. If that doesn't look like a stagnant stock right there, Sundial just sitting, not really making a move. I mean, every bar is basically overlapping all the other bars that they've had over the past couple of minutes. They're just moving sideways. Not too much action coming in from Sundial or SPY, and AMC even isn't having crazy movements. It's moving down a little bit, but nothing insane going on. The markets overall, though, you guys will be happy to see this. I mean, look at this. You can tell exactly what happened in the markets and exactly why we're seeing this. Right here. The Russian, I mean, look at how green everything is, except energy, right? And this is entirely because of the Russia-Ukraine situation and the alleviation of a lot of fears around that, about Putin deciding to pull his troops back. Pretty much everything is green. Everyone's happy to see that there's not going to be a war, at least not in the next couple of days, most likely, between the United States and Russia. And energy is not doing too good. The reason energy isn't doing too good is because most of these are oil and gas companies, and there is now less likely to be a huge shortage of oil and gas because Russia and Ukraine are producers of oil and gas, and people were worried if there was a war that we weren't going to be able to get as much from them, probably none from them, and that we'd be using maybe a lot of it on our military. Well, now oil and gas prices can move down, and these companies are no longer soaring. They're actually dumping, and the rest of the market is getting all of the new cash flowing into it. So overall, not a bad chart to be looking at. I'm happy to see that the markets are pretty darn green today, and we're following the trend that we've been hoping to see over the past while. So we've got SPY, we've got QQQ, and we've got IWM. Now, what I'm happy to see is that SPY is green, right? Everyone wants the overall market to be green. We're up 1.3%. QQQ, the tech-heavier stocks, it's up 1.55. Sure, it usually beats out SPY, right? It's a more growth-oriented index, right? There's a lot more tech in here. IWM, on the other hand, the smaller market cap stocks, the ones that have been beaten down for so long, the ones that are mostly, 50, 60, 70% off of their all-time highs, this one is up 1.72%, actually beating out the S&P. So the smaller market cap stocks are having a bigger recovery, a better recovery, a stronger recovery than the overall market and the large mega cap stocks. So I'm really happy to see that. That is indicating that we might finally be at the bottom of this huge downtrend that, I mean, you look at IWM, over the past 365 days, we are down. And if you look at the SPY, we are very green on the SPY. So IWM, it's tracking the Russell's 2000. It's basically smaller market cap stocks than what you would find in the S&P. And over the past couple of months especially, we've really been hammered. But over the past year, we've been pretty stagnant. Not much has been happening in the world of small market cap stocks. A lot of them have been moving down in a big way. The S&P, on the other hand, has been moving up, mostly carried up by these mega cap stocks that also dominate the QQQ, these tech-heavy stocks. And we're starting to see a little bit of a reversal, right? We're starting to see, although everything is green, we're starting to see more green in IWM and these small market cap stocks, which is exactly what we want. So I'm very excited to see it because a lot of those stocks are the ones that retail is buying a lot of the time, right? The high growth companies. And I'll say that the past year just about has definitely not been a super high growth environment. We haven't seen growth stocks doing very well the past year. Some growth stocks, sure. We've seen the mega cap growth stocks like Microsoft and Apple and Google, Nvidia, Amazon, Facebook, Tesla. They've been doing decently. Facebook, not so much as of late. Now it looks like they're doing all right today. But we've seen those stocks performing very well. Now we're starting to see the smaller market cap stocks performing well, which is very exciting because oftentimes you can get bigger gains percentage-wise in those smaller market cap stocks. Once again, they have smaller market caps. That's what, they have smaller market caps, so they're going to be a lot easier to move, and there's more growth potential there. It's a lot easier to take a company from $10 million to $20 million than from $100 billion to $200 billion. It's a lot less footwork that you're going to need to do as a company to make the additional sales. So overall, I think that there is massive potential in these smaller market cap stocks. I think, it's not just the ones that we talk about on the channel. There are plenty of them that could potentially be very good. MMAT, Metamaterials. This is another one that got beaten down from its highs of 21 bucks. Sure, that was during quite a bit of hype, but even more recently, it was up around 5, and I think they could be doing pretty darn good in the future. It's one that I own. Smile Direct reconnected successfully to OBS Studio. Nice. Nice. So are we back, guys? Can we see what's going on in the stream? Yeah, hopefully we can. Hopefully everything is back as it should be. Let's see. Yeah, I think... There we go. Yeah, we're back. Nice. Awesome. Yeah, I don't know. My internet, I'll say we've been having some issues lately. Whenever someone downloads something, the whole internet would crash. We just restarted the router and it seemed to have fixed it, but who knows why that crash happened. Oh well, we're back now. I just switched to a different internet that we've got. But James Wood says MJNA play of the year over the counter. Yeah, MJNA, another small market cap stock, a very small market cap stock, and a cannabis stock. So this one, I think, could be doing good. We've seen it do really well in the past whenever we've had legalization hype. And I will say, this one has a historic support around 2 cents, and we very rarely trade below that and sustain those levels for significant periods of time. We were there for a lot of 2020, but after that, we certainly pumped up quite a bit. Now, that's not to say that we couldn't remain there for a while, right? We're down at the moment below 2 cents, but that just means that I'm happy to be buying up shares below 2 cents. I think my cost average is 0.18 cents, or 1.8 cents. So I don't mind too much having a very cheap cost average on this. Not plowing too much money into it, right? It's an over-the-counter stock. It's a little riskier than the stocks I normally buy into, right? Very cheap penny over-the-counter stock, but has big potential in the future. So we'll see what happens. We'll see what happens with MJNA. I'm bullish on it overall. I think that at the very least we can get above 2 cents pretty easily, but you never know, right? Something could go wrong with the company. I don't think that's going to be the case. And Zach says, too bad you don't know a network engineer. I know, that is what it always says in your email, Zach. Software network engineer, something like that. And Max Pierce says, Rob, you talked about DWAC warrants, but any other warrants you might be looking at soon? No, I'm not the biggest fan of warrants typically. I like the DWAC warrants because they do provide essentially, not necessarily a purely arbitrage opportunity, but essentially you're just getting the stock for cheaper if it remains at these prices. So the warrants do provide you the opportunity to buy DWAC for a bit less than you might otherwise be able to. Potentially, right? There's still some risk with them, but those are the only warrants that I'm too interested in at the moment. Cfvi also has some warrants, which, if you bought them a couple of days ago, would have yielded a pretty penny for you. They would have, doubled in value from the... Yeah, they would have just about doubled in value from the lows to the highs, more than doubled in value, actually. Now they wouldn't quite have been double, but but still a pretty big gain. And CG says, Rob, aka Warrant Buffett. Yeah, I mean, the warrants are interesting, but there is something nice at the end of the day about buying the stock and then being able to sell options against it. That's probably my preferred method. Not everyone's going to like it, but that's what I prefer. And, that's just because I've been in the markets for a long time. I've done a lot with options. I've learned how to use them and deal with them and trade them. And I've figured out a strategy that works for me. Now, everybody's strategy is going to be different. I'm not trying to tell you guys to do it exactly how I do it. I'm just telling you guys what I'm doing. And, if anyone wants to take that and learn from it and use it as a stepping stone to maybe learning from some of my mistakes, then, yeah, that's a good thing. But none of it's financial advice or anything like that. I never recommend anything to anyone, but, that's how it is at the moment. And I will say, something people were probably waiting for is last week I said that there was a big announcement that we had for yesterday's stream that on Monday we're going to talk about something big. We're pushing that back to next week because I have been a little busy as of late. Didn't quite get everything done, and I want this whole thing to go smoothly and to be well accepted. So we're not announcing anything today or the rest of the week, but next week make sure to tune in for the first stream, and I'll actually say we'll pull up this this site that shows us when the stock market's closed. So the stock market will actually be closed on February 21st. Yeah, so holidays for the stock market. It's Washington's birthday. I believe it's President's Day. I don't know why they call it Washington's birthday, but regardless, Washington's birthday, Monday, February 21st of 2022, the stock market will be closed. So we won't have the morning live stream or probably any videos on Monday. Maybe we will. If something goes on with True Social, if that ends up dropping, then yeah, we'll probably make a video on it. But other than that, we probably don't have anything going on Monday. But make sure to tune in Monday or Tuesday, February 22nd, for the first live stream of the week, where we'll probably have an announcement. And Max Pierce says, so market is closed on DWAC Day. Yeah. Unfortunately, it is. Yeah, I think it's President's Day, CG. I'm pretty sure. I don't know why it says Washington's birthday on this New York Stock Exchange holidays chart right here. I don't know why. It says, well, I've never seen this. I've never seen it called Washington's birthday anywhere other than this site that I view whenever I need to figure out when the markets are closed. Yeah, so strange to see. And yeah, and NJ says announcement on $2 Tuesday. Wow, yes. Yes, it will be. It will be. Yeah, so it'll be, I think you guys will be, a lot of you guys will be excited to see it. A lot of you guys will be excited. Now, for the close, we will just pull up and see where DWAC, Cfvi, Sundial, and the SPY ended the day, or at least ended the stream. It looks like we're green on all of them. So all around, we're seeing really good stuff. DWAC is the least green, up 0.55%. Then the SPY is the second least green, up 0.17 or 1.17%. Now we've got, look at that, Sundial in number 3, moving up. Fortunately, it wouldn't have been up nearly as much without the past 4 minutes, but we are moving up, getting closer to 63 cents in highs of the trading day. Hopefully we can turn today into a very green day. I'd be excited to see us move up maybe towards 65, 66 cents. That would be nice. And CFVI taking the day up 4.2%. Really would have made more sense if Sundial was up 4.2%, but so be it. That's what we've got for the day. It's 10 o'clock, guys, so thanks for joining us. Make sure to join us tomorrow. We do these streams every morning at 9 that the market's open. We won't be here on Monday next week. That is President's Day, so the markets will be closed. And then on Tuesday, we've got an exciting announcement. So even if you don't join us the rest of the week, make sure to come in on Tuesday of next week. We've got probably some exciting stuff to talk about unless I get lazy. So other than that, guys, have a great day. See you in the next one. See you tomorrow at 9.